This podcast includes information provided by the issuer and does not express the views of the interviewer. This podcast may also include forward-looking statements by the issuer that involve certain risks and uncertainties to its business. Because forward-looking statements are subject to risks and uncertainties, the issuer's actual results could differ from those indicated in this podcast. Welcome to the Planet MicroCap Podcast. I'm your host, Robert Kraft, and thank you all so much for the support and for tuning in to the Planet MicroCap Podcast. You can follow the podcast on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. You're listening to episode 8 of the Planet MicroCap Podcast. So before we get started with our next interview on the Planet MicroCap Podcast, I wanted to catch you up on what we featured recently on StockNewsNow.com. We featured articles highlighting video interviews with the following companies: Bury Gold Limited, BYR on the ASX, Revelo Resources Corp, RVL on the TSX Venture, Pressure Biosciences Inc., PBIO on the OTCQB, M Pharmaceutical Inc., MPHMF on the OTCQB, and MQ on the CSE, Resverlogics Corp, RVX on the TSX, and RVXCF on the OTC, Iberian Minerals Limited, IML on the TSX Venture, and SLDRF on the OTCQB, Bellerophon Therapeutics, BLPH on the NASDAQ, Labstyle Innovations Corp, DRIO on the OTCQB, Neocorp Developments Limited, NB on the TSX, and NIOBF on the OTCQX, Biopharmex Corporation, BPMX on the NYSE market, Lightbridge Corporation, LTBR on the NASDAQ, and Finjan Holdings Inc., FNJN on the NASDAQ. We also published an SNN Q&A with NSYNC Inc., ESNC on the NYSE market, and an SNN Q&A audio-only interview with CCOM Satellite Systems, CMI on the TSX Venture, as well as an article written by Jim Collins from the MicroCap Review magazine, Summer-Fall 2015 issue titled Looking for the Next Great Microcap Stock. Now, for this episode of the Planet MicroCap Podcast, I wanted to learn more about the relationship and long history between microcap stocks and the OTC markets. For clarification, OTC stands for over-the-counter, which means, as Investopedia defines it, and I quote, a security traded in some context other than on a formal exchange, such as the NYSE, TSX, AMEX, etc., end quote. Investopedia breaks it down even further when it states, and I quote, the reason for which a stock is traded over the counter is usually because a company is small, making it unable to meet exchange listing requirements, end quote. That sounds a lot like microcap stocks, am I right? However, because of advances in new technology and growing interest in microcap stocks, I wanted to find out if the relationship has gotten more complex over the years. To help me with this task, I spoke with Jason Paltrowitz, Executive Vice President of Corporate Services at OTC Markets Group, Inc., who own and operate the over-the-counter financial marketplaces OTCQX, OTCQB, and OTC Pink. He is responsible for all international and domestic corporate services. The goal for this episode is for us to learn more about what is the OTC markets, history of the over-the-counter stock marketplace, and how it relates to microcap stocks. Thank you again for tuning in to episode 8 of the Planet MicroCap Podcast. Please enjoy my interview with Jason Paltrowitz from OTC Markets, but first, a word from our sponsor.
A comprehensive streaming of market data, research, and portfolio management application for you. QuoteStream is a real-time streaming quotes and research system designed for the day trader, retail investor, institutional investor, both new and old. QuoteStream offers low latency, tick-by-tick data, advanced charting, comprehensive technical analysis, news, and research. With no software to install and no servers to maintain, QuoteStream is the ideal solution for you. Go to StockNewsNow.com and start your free 7-day trial. Click the QuoteStream banner in the header or real-time quotes in the nav bar to get started building and managing your investments.
In this episode of the Planet MicroCap Podcast, I spoke with Jason Paltrowitz. He's the Executive Vice President of Corporate Services for OTC Markets Group, Inc. And our topic today is discussing the relationship between the OTC markets and microcap stocks. Jason, welcome to the Planet MicroCap Podcast.
Hi, how are you?
I'm doing very well, very well. So today, the point of our podcast, this episode, is that we wanted to learn more about the OTC markets. When using the analogy that OTC markets is like the superstore for microcap stocks. You know, most microcaps that are publicly listed are actually on one of the exchanges that are listed on the OTC markets. So with that, Jason, let's talk a little bit about a brief history of the over-the-counter markets. You know, let's talk about how the OTC markets came to be and maybe where it came from.
Sure. We actually have a very long history. The company's earliest iteration was over 100 years old, something called the National Quotation Bureau, which in essence was a print shop and used to print a book every week with off-exchange listed securities where you'd be able to look in that book and see who was making a market in those securities, the ticker symbols, and what the latest bid-ask price was. That book was actually printed on pink paper, so the company became what most people commonly refer to or had referred to for a long time as the pink sheets. That pink sheets was really 10,000 securities ranging from the microcaps that we're talking about here to international securities who had their ADR that was trading here. Again, the pink sheets for most of its life was that paper-based book where you could find market makers that would transact in those securities. And so it continued to be a phone-based market up until the late 90s, early 2000s, when pink sheets actually became electronic. So the printing of that book was no longer necessary. The new owner, the CEO of our company, who's still the CEO, took the company from that paper-based phone book, if you will, to a fully electronic ATS, which we are now, getting ATS status back in 2007, 2008. So we're now a fully electronic, SEC-regulated, FINRA-registered alternative trading system, or ATS, on which 10,000-plus securities trade electronically, really in the way NASDAQ used to be before NASDAQ became an exchange. In addition to that, what we've done, because we were the pink sheets and you did have a lot of different security types trading in one place, is we've created some structure around our markets to make it easier for investors to discern what an investable security is versus what perhaps a non-investable security is. So we've put markets in place, markets OTCQX, our best market, which has high financial standards for companies to join, OTCQB, our venture stage market, which is for early stage and developing companies to kind of learn to be public companies. And then we still have our pink market, which is the remainder.
So you actually got into the next question I was going to ask you with regard to these different markets listed under OTC markets. Maybe let's get a little bit more specific. What are some of the differences between OTCQX, OTCQB, the pink sheets, and what are the qualifications of trading on each of them? What types of securities will we find on each?
All right. Well, I'll start at pink. So the pink market, what probably was the pink sheets way back when, there's no company involvement, right? Pink is a broker market, and it allows broker-dealers to be able to publicly quote any security that they want. And so that market contains a lot of different security types, from dark, distressed, bankrupt companies to some of the largest international ADRs that just choose not to engage the U.S. investors, in the best possible way. So that marketplace, again, no company involvement, no requirements. We do tier that market, though, just to help protect investors. So there's what we call pink current, which are companies that are current in their disclosure requirements to whoever their regulator is, all the way down to something that we'll call caveat emptor, or skull and crossbones. So when companies are really running afoul, even though they might be quoted in the pink market, we want to make sure investors know that they should really be careful of that security type. Again, open market, no company involvement, but it does allow broker-dealers the opportunity to trade efficiently in security types. So when Radio Shack goes bankrupt, it's good for investors to be able to have a market where they can still buy and sell that security once they come off exchange. OTCQB is our venture market. It really is America's venture market. The companies on OTCQB, primarily microcaps. There are about 895 microcaps that trade there. That market does not have financial requirements, but it does require that companies do a number of best practices to make themselves better public companies or to put their best foot forward. So we require companies to disclose who their CEO is, who their CFO is, who their auditors are. We require companies to disclose who their directors are, their shares outstanding number. We make that available. All of those types of things, and certify themselves to be good public companies. Then we have OTCQX, which is our best market. That marketplace does have financial criteria, and that again allows those more developed U.S. companies or international companies the opportunity to separate themselves as best in class, meeting that financial requirement, making their information available, publicly disclosing their financials, material news, and the like. So those are the three marketplaces.
And, you brought up a great something that I wanted to hit on a little bit more with regard to the OTCQX, or all the exchanges really, is this idea of globalization. And how has the OTC markets helped globalize the stock market? And with that, maybe include a discussion of ADRs and what they are.
Right. Well, one of the big drivers of our market, whether it's QX or Pink, is the ADR market and even the foreign securities market. So if you look at the 10,000 securities that trade here, of that 10,000 across all of our marketplaces, about 3,000 of them are international securities. Those range from Canadian securities that have their secondary market here to ADRs and just other international companies whose ordinary shares trade here. It makes up a very large percentage of our volume. And so what we've been able to do is, for all of these companies, is give them a place where they can have a secondary market with efficient trading, with the ability to be able to make their disclosure available here in English to U.S. investors without having to go through the cost and complexity of being listed on a U.S. stock exchange. So if you think about a Swiss company that's already listed in Zurich, that already is going through the Swiss disclosure standards, that's running their company like Roche, they're running their company as a Swiss company, doing all the things they need to do to be a Swiss company. For them, why would they want to be listed on the New York Stock Exchange and have to have those duplicative reporting? They don't really know U.S. disclosure. They definitely know Swiss disclosure, so they run a risk of not doing things correctly. It's also very costly to be listed on a stock exchange in another market. So what they can do is they can list on our OTCQX market, have all the benefits of being public in a secondary market without the cost, complexity, and additional risk associated with being SEC registered and Sarbanes-Oxley compliant and the like. So if you think 3,000 securities from around the world are taking advantage of that, and that represents really probably more than 50% of the trade volume across our market on any given day.
Very cool. Yeah, I mean, as I said, I think you would agree. It is the superstore for not just local or domestic microcap stocks, but also internationally. And sorry, not just microcaps, but there is a percentage of companies listed on the OTC markets that are small, mid, large cap companies as well. You said using Roche as that example. And how difficult is it for companies, using Roche as that example? You kind of got into it, but how difficult is it for these companies to list on multiple exchanges, including the OTC markets in the U.S.?
On our market, it's actually not that hard. What we've done is, we want to be able to offer companies 75, 80, 90% the value of being publicly traded in the United States at significantly less cost and a significantly less burden. So for any international company to be listed on New York or NASDAQ, let's say, There's significant exchange requirements. There's significant disclosure requirements that are required in order for them to be there. We do it without requiring companies to be, SEC registered. We don't require companies to necessarily be Sarbanes-Oxley compliant. We don't have the onerous listing standards that the New York Stock Exchange or NASDAQ has by virtue of them being a stock exchange. We allow companies to use their home market disclosure. There's an SEC exemption. The exemption is called 12G32B that allows companies to have a secondary market here and be exempt from SEC registration so long as they make their home market disclosure available in English publicly. And we allow companies to use that exemption to be quoted on one of our marketplaces. So it really does save millions and millions of dollars that a company would have to spend to be on a national exchange. They can save that money, which is good for shareholder value, but can have a public marketplace that allows them, again, 80 to 90% of what you would want a public market to be without that cost and complexity.
As I said, a big percentage of microcap stocks are listed on one of the OTC market exchanges. Given there's multiple reasons, and the main reason that I'm hearing is it's cost. But what are some of the other reasons that microcap stock or microcap companies would want to be listed on one of the OTC markets exchanges?
Well, when you look at the microcap space, we offer a little bit of a different value proposition clearly to global brands that are having their secondary market here. But we're a market that allows companies to learn how to be public. Companies on day one aren't ready to be exchange listed. They need to learn how to make information available. They need to grow their businesses and not have to be worried about that cost and complexity of being on a stock exchange. They need to build out their investor relations platform. They need to build liquidity and grow so that when they do get to an exchange, they're not lost amongst their peers and their bigger companies that have the greater liquidity and the greater trading volume. So what we do give companies is the ability to learn how to be public companies. And again, the cost and complexity are a part of that. We've created the market that companies need now so that they can get to where they want to be in the future. Many of those companies will uplist to an exchange. We've had 83 exchange graduates in 2014, and we're probably close to 50 already this year, companies that have graduated to a national exchange. We take great pride in helping those companies grow so that when they do get to an exchange, they are successful. They've learned how to be public companies. In addition to which, if you think about the way the markets do work, and the SEC had a pretty good stat, 89% of ownership of companies with market caps less than 50 million are owned by retail investors. And if you think about market structure, NASDAQ and New York, they operate these big matching engines. And it's very hard for individual owners to get their transaction cleared through a big matching engine, right? We operate what NASDAQ used to be is that old network of market makers. And when you have small companies that don't have a lot of liquidity, you really need market makers to help bridge that gap. You need to get that order flow going, that public display of quotes out there to help companies grow. And so there's a market infrastructure difference on our market versus New York and NASDAQ that also helps facilitate the growth of microcap companies as they grow.
How does that market-making system work on OTC markets?
It's funny. We've gone back to the future, if you will. We were NASDAQ before NASDAQ was an exchange. So we're a registered ATS that has a network of market makers that link into our system. And rather than anonymously match, as I mentioned, the way an exchange does, those market makers can post their quotes and they can message each other to trade those securities. So it very much is what NASDAQ was prior to being an exchange, an interdealer broker system where market makers can message each other and trade securities.
And on a quick side note, how would that affect the retail market? What as let's say a brand new investor, I see a company, they just happen to be listed on the OTC markets. How does that way of trading or that market making, how does that affect me?
That affects you because as you're trading on your, that market making system and that infrastructure that's been created has actually made it a lot less expensive for you to trade. If you think about the information that's available now to the retail investor online through their E-Trade or their Schwab account, they have access to more information now than probably institutional investors had 20 years ago. And so that ability to trade on an E-Trade and to have that order routed into one of those market makers that's standing there at the ready to trade those securities, it makes it efficient. It creates better trade execution quality. There's a better service level. And you can see that all as an investor, publicly in an open space. So you can watch the market move and not just, call somebody and have it thrown into through a dark box.
The one thing that you bring up that's interesting that we kind of just talked about with regard to liquidity, and it's a problem that exists in microcap stocks that you hear time and time again at conferences around the world, is that there's a lack of liquidity. And as every investor will tell you, they want to know if they can put their money in, they want to be able to get it out. So how does OTC Markets help to solve this problem? How are you trying to solve lack of liquidity in microcaps?
Well, you can never solve lack of liquidity.
Right.
Companies have to earn it, I guess, right? You have to be a good public company. What we do is with our OTCQB and our OTCQX platform, right, where companies are listed there and we have requirements to be there, is we work a lot with companies on helping them grow, as I said before. So a lot of that is making sure your news is available and readily out there in the public domain. We do things like helping companies with virtual investor conferences or lighting up the market events or newsletters to make sure that they're getting visible and they're getting seen. For companies that are on our OTCQB and OTCQX platforms, we open up level 2 quote. So we make that publicly available to the world, and we allow companies to put that on their website so that investors can see, right into the book real time as to, the best bid ask and the spread. So we do a lot of things to try to get the word out for companies. At the end of the day, a company has to have a good business. They have to execute on their strategy. They have to have discipline with respect to how they issue shares, or if they issue shares, or how they disclose that and make that information available to people. So the company has a lot that it needs to do. It has to have good advisors. It has to be cautious in terms of what it does with its promotion. It needs to get out and be at the conferences and be meeting investors. And if a company is doing all of those good things, and we help them with that, then we provide them with a good public market for them to succeed on the back of that effort.
At the end of that, I should have rephrased that. I should have said, how do you help the companies that are doing it the right way or running their businesses correctly, doing everything that they're supposed to do, get the exposure that they deserve, really? I mean, that's what it comes down to.
Like I said, we had 83 graduates last year, and I think we're close to 50 this year, and so we're doing something right. We really are helping those companies grow and succeed, and it's a partnership. If they do it right and we do it right, then, we think we created a fantastic marketplace for microcap companies to grow, develop, get the word out, and, we're very proud of those exchange uplists, and hopefully we have many more of those in the future.
Yeah, I was just going to ask, how do you feel about uplisting? I mean, at the end of the day, it's, I feel it's funny because we're the same way. We don't cover on StockNews.com. We don't cover companies. There's few that are over 300 million, but for 99% of them, they're under 300 million in market cap. So we're the same way when we're like, as soon as they go above, we're like, oh, great, enjoy life in the small cap world and have a great time. So I guess, do you have a similar mentality when it comes to companies that, if they're ready to uplist, they go? Because at the end of the day, it's a good thing.
It is a good thing, and like I said, we're very proud of it, and, we're probably, the only marketplace that press releases events like that. So every company that graduates from one of our QB, from either our QB or our QX marketplace, we put out a press release congratulating them. We continue the dialogue with them even after they've moved. We continue to check in with them, see how they're doing. They can always come to us and ask us questions and advice and those types of things. So you would think you're right. We'd be losing business, so it would be a bad thing. But success begets success, and we're proud of that. And as we've built out this market as a market that helps companies grow and succeed, as we've built out a market that from an investor perspective to be open and transparent and connected to those investors so that they can make better investment decisions, ultimately for the brand and the success for our business, long term, that's what we'd like to see. Now, clearly not every company that comes here has that aspiration. I talked about the international companies. Many of them don't aspire to be on an exchange, and we're a great market for them for what they need. So we are the market that companies need now, and we help those companies grow that way.
How does OTC markets attract new listings, especially when you think about the competition coming from crowdfunding, private companies being able to put up, publicize their private placements, as well as some of the more known stock, not more known, but like NYSE and NASDAQ having these sub exchanges that microcaps can list on. So how are you planning to compete with that?
That's a good question. We compete in a number of ways. First of all, you just have to be in the mix. So if you look at things like Reg A Plus recently, so the changes in the Jobs Act that allow companies to raise up to $50 million and have those shares be immediately available for secondary trading. We compete there because we are, the market for secondary trading of Reg A Plus deals. So for those companies to list on, one of the sub-markets in NASDAQ or New York would almost be impossible at this current stage from just doing that one offering. We're out speaking to the lawyers and the IR firms and the advisors and the regulators, to put forward our proposition and to help engage on these topics. So our CEO is regularly at the SEC or at FINRA or at any of the other venues where this stuff is taking place, to make sure that our name is out there and that we're in the mix and that kind of the regulations are written with us in mind. So we compete there. We compete, as I said, as our value proposition, whether it's 50, 60, 70, 80% of the value of a national exchange at significantly reduced cost, 25, 30, 40% of the cost. So we compete there, and that's a compelling argument for companies in the microcap space, where they're still trying to build out their business, and the added cost of $1 million to be listed on New York and NASDAQ, they might not be ready for that yet. So, depending on the company type, our value proposition slots in nicely, and we're able to compete there. We've grown substantially in the last couple of years. We have close to 2,500 premium clients on our QB and QX markets, and so we continue to see opportunity and look forward to continued growth and competing to get more companies to join those premium markets.
Okay, before I let you go, Jason, what's your background, and also where can people go and find more information about OTC markets and go shopping?
Well, they can find more information on our website, probably the best place, OTCMarkets.com. There you can learn a lot about our markets, our marketplaces, the requirements. You can look at companies. Each company has its own profile page with a lot of information. You'll be able to see that level 2 quote detail and all of those good things. My background, I actually spent almost 15 years in the ADR business, so I come at this from the international point of view, but I left that for a while and was doing collateral management and tri-party repo for a while, and now I find myself here.
On that note, I think we're about time to wrap up. Jason, thank you so much for your time and coming onto the podcast and helping our audience learn a little bit more about the OTC markets, how they're helping microcap companies get their stories out there, and providing a place for the retail audience and an institutional audience to come and find some of these great stories that are out there. So thank you so much again.
And thank you for the opportunity.
Thank you all for tuning into the Planet MicroCap Podcast, and thank you, Jason, again for coming on to the program. You can access the podcast by going on to stocknewsnow.com under podcast, go to podbean.com and search Planet MicroCap Podcast, or onto iTunes and search Planet MicroCap Podcast. Stay tuned for the next episode of the Planet MicroCap Podcast, where we'll have our next week in review, answer a new question from Ask Mr. Wall Street, and have another exciting guest to discuss all things microcap. If you have any questions or comments about the podcast or for Ask Mr. Wall Street, please send us an email at info@stocknewsnow.com. I'd love to hear from all of you. This podcast has been brought to you by SNN Incorporated, publishers of StockNewsNow.com, the official microcap news source, and the MicroCap Review magazine. I'm your host, Robert Kraft, and thank you again for joining me on the Planet MicroCap Podcast. Have a great week, everyone.